Gold up a 2.5-month high. We'll be asking Jim Wyckoff, technically speaking, is up next. Finally, some action has resumed. Jim, good morning.
Good morning, and Daniela. Yes, it is an active day in the gold and silver markets today, to the happiness of the bulls.
So, Jim, as you mentioned in your AM roundup on Kitco News, gold futures solidly higher, seeing a 2.5-month high. What's driving gold today?
Well, we're seeing a solidly lower U.S. dollar index that is in higher crude oil prices that are bullish outside market forces. We've also seen some new technical buying coming into the market. Now, I know that it's been said that volumes are thin here in the dog days of summer, but nonetheless, light volume. The price action is still valid on the charts. Gold has moved right up to the boundary of its weeks-old sideways trading range, and if we see a move in December gold above resistance at the June high of 1646.40, which we are very close to doing that as we speak, that's going to be what could be the beginning of a bullish upside breakout in the gold market that would suggest still higher prices in the near term.
Jim, was this breakout earlier than you expected? Were you expecting to only see something once the Fed spoke in September?
Yeah, it is earlier than I expected. I still think there's going to be some headline risk enter the marketplace after the U.S. Labor Day holiday. What with the European Union debt crisis, we've got some issues in the Middle East. So I do still look for September to be a more active trading month than August.
So, Jim, Fed Chairman Ben Bernanke will be speaking next week at Jackson Hole. How relevant is this meeting?
Well, the market's certainly going to be watching that meeting with Ben Bernanke speaking. Right now, I think the marketplace is just really sitting on the fence regarding odds of a QE3 initiative being unveiled. And I guess I'm the same way. It's not going to surprise me if it happens. It's not going to surprise me if it does not happen. I do think that there's a lot of people who now think that there's going to be no QE3 at all. I think that may be a bit premature. I still think the odds are probably 50-50, maybe even 60-40 that we do see some kind of monetary policy initiative before the end of the year.
Jim, in some overnight news, it was reported that India's festive gold season imports will be half of what we saw last year. They're citing the poor monsoon season and, of course, the high price of gold. This sounds substantial, Jim.
It is substantial. However, by the reaction of the marketplace today, I think that news had been pretty much factored into the marketplace. It was a kind of a surprise to me to see that big of a reduction. But for quite some time now, we've been hearing talk of less physical demand coming out of Asia, and what we saw this morning just kind of confirmed that.
Okay, Jim, let's look at silver now. The metal hitting a fresh 9-week high. What's happening here?
Indeed, Daniela, a technical bullish upside breakout from a trading range in the silver market that's really given the silver market bulls some fresh technical energy.
Jim, it's now time for your market rating system. What grade are we giving gold and silver this week?
Daniela, this week I'm giving gold a 5.5. The bulls are gaining a bit of upside technical momentum as we challenge that resistance area of the trading range. For silver, I'm giving silver a 5.5 also. Both gold and silver could creep higher in their Wyckoff market ratings this week if we see more price strength, as the bulls are having a good week so far in the precious metals.
So these past few weeks, Jim, you have slowly been giving the metals a better grade.
Right. It's it's just the bulls are gaining some near-term technical momentum. It's not in dramatic fashion, but history shows that it's those unassuming, quiet, gentle rallies that are the ones that are most likely to be sustained. So if you're a gold and silver market bull, you're kind of liking what you're seeing here.
Okay, Jim, bring it home for us. Final thoughts for investors this week.
Well, just keep an eye on those outside markets. I still think we're going to see some quieter action to end the month of August. I don't look for any big dramatic price moves until after the U.S. Labor Day holiday. But keep an eye on the outside markets, the dollar index and crude oil, and I believe the precious metals are going to be tracking them pretty closely on a daily basis.
So, Jim, when you say outside markets, you're referring to the U.S. dollar index and crude oil, right?
Commodity markets tend to follow those two major markets and are influenced on a daily basis by them. Any day you see the U.S. dollar index trading solidly higher, that's going to be at least a bearish limiting factor on any upside price moves in gold and silver, whereas significant weakness in the dollar index, you're probably going to see some buying interest moving toward the gold and silver markets.
Jim, thanks for your thoughts today. We'll see you next week.
Can't wait till next time, Daniela. Bye-bye.
And thanks for watching this edition of Technically Speaking with Jim Wyckoff. You can email us at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.